So welcome to our opening keynote speaker for the virtual gold conference. I am excited, but here's the thing, ladies and gentlemen, this man is really, really busy. So what I've done is I've pre-recorded my chat with Bill. His name is Bill Holter. He is a partner with jsmindset.com over in the US. He is busy as a bat, and I really appreciate your time coming on the call, Bill, because it's chaos in the markets at the moment and chaos in the precious metals markets. And you were just telling me that there is no metal available at the moment. I want to get into that in a moment. But first of all, thank you for your time.
Thanks for having me, Kerry.
The title of for this opening talk was "Why the Current Global Economy is a Banana Republic." First of all, in real time, what is going on right now, Bill, that you are absolutely smashed? Talk to me more about what's going on.
Well, it's Monday afternoon after the close, and Friday. Friday, the if you want to call them the game stoppers, the ones who have been attacking leveraged short positions, decided to go after silver. And for the first time that I've ever seen in my life, dealers across the board basically shut down over the weekend. There were some that were open early on Saturday, but by Saturday close, nobody was taking orders. And the reason being, dealers were fearful that silver was going to gap open higher and they had no way to hedge themselves. So basically they took all their inventory down. There is metal available, and gold is tight, but it's not nowhere near what's happening in silver. We've just had an absolute rash of buyers basically cleaning the shelves. And I can tell you, just for an example, on Friday morning, Silver Eagle premiums were in the $4.50 to $5 over spot range. Now you're looking at anywhere from $11 to $13 per ounce over spot. So on Eagles, we're pretty close to a 50% premium. Now we've seen this before. We saw it when silver got smashed in 2008 and again in 2013, and I think there was another one in either 16 or 17, where they smashed the price of silver, yet you weren't able to buy physical metal at those depressed levels. This is different. This is happening while investors are clamoring for silver, as opposed to the paper prices being smashed by the COMEX cabal, or whatever you want to call them. So that's what's going on. Is we've just been overrun with buyers.
Bill, do you think that you've been overrun by buyers? It's I know I've seen the commentary about they're going to short, they're going to do the same thing they did with GameStop to silver, but do you think that would actually happen? Is this a short-term run on silver, or do you think that there's a longer-term issue here?
Well, there's a longer-term issue, and if you look back, really, you can look back 30 or 40 years. There's an issue with silver. Year after year, the offtake has been more than the global supply, the mining supply. So what's happened here, I think this is a fork in the road, and I think what you're seeing is the physical market and the paper market are finally parting ways.
Wow. Okay.
It's always been in the past that the paper market priced the physical market, and you could look at that as the tail wagging the dog. Now it looks like, and this is something my partner Jim has said for years and years, that ultimately the physical market will be the pricing mechanism for both silver and gold, and it looks like this is probably the start of it.
Do you see this as Main Street just turning around and getting angry and understanding that the physical market has been controlled by the paper market for so long?
That's the story. And when I say story, I'm alluding to that's the cover. I think you have big money is attacking the shorts. And if you look at what's happened with GameStop and ACM and the other the companies that have been the shorts have been run, what the buyers are doing is that they're targeting highly leveraged short positions. And it's almost like a Black Lives Matter gang walking down Wall Street and blowing up hedge funds as they go by.
Do you?
Now, I was just going to say, I don't think this is necessarily young millennials with their $600 PPP checks. I don't think it's that. I think you're seeing some intelligent money aiming at levered positions, and they're picking them off one by one. And the problem is, as you pick off a levered position, you're destroying the balance sheets of those who did the shorting. So we very well may see some hedge funds and maybe even some major banks in trouble in short order.
So this is the beginning of chaos in the markets, Bill. It's been controlled for a very long time. Do you think that they can bring it back under control and bring this chaos back under control? Or do you see that this is just the start of something that will ultimately impact gold and silver markets?
I don't think this is a flash in the pan. I think this is going to have some long-lasting effects. And another way to look at it is this is the beginning, or we're actually in the reset. You're seeing asset prices reset against each other. And understand the title of this is regarding the world's a banana republic. To be a banana republic, you have to be over indebted, and your rule of law has to have broken down. And that's where we are. The rule of law is breaking down. It has already broken down. I mean, there's no way, for instance, on GameStop, 140% of outstanding stock was shorted. And now that's an impossibility. That's an illegality is what it is. Because once you pass 100% of outstanding stock sold short, it's by definition a naked short, which is illegal. So that extra 40%, where did it come from? Who shorted it? And where did the shares come from? They're fictitious shares.
Wow. And GameStop won't be the only one. You see this as a wider systemic issue across all markets?
It is. And as a matter of fact, beginning last Thursday, you saw some mining shares. All of a sudden, the volume just blew out to the upside in the tens of millions of shares on companies that would trade 500,000 or 1 million shares a day. We're trading 20, 30, 50 million shares in a day. And that happened again on Friday, and it happened again also today. So it does look like the mining sector, which has been so heavily shorted and controlled for so many years, may finally be busting open.
And when you say it's going to bust open, so you're not just talking about the physical market, you're also talking about the equity market.
Right. These are the miners.
Yeah.
And you've seen big price moves. I mean, many of these companies have moved 20, 30, 40% up in a day's time.
So most people, as you know, you've spoken about before, Bill, most people invest in the paper market. And we were talking just a moment ago about the physical market. If it's running hard at the moment, do you think that it is a good time for people to make sure that they have some exposure to gold and silver, or you say it's already run, too late?
No, it hasn't. No, it's not too late at all. I think this is just the beginning. I mean, just for example, and I've mentioned this on many other interviews, I've written about it. If you took the gold that the U.S. supposedly has and has not been audited since 1956, if they were required to pay the $28 trillion of on books debt, now there's much more than that. There's, Medicare and Social Security and Ginnie Mae, Fannie Mae, et cetera, all kinds of other promises. But just the on books debt, which is 28 trillion, each one of the supposed ounces that the U.S. owns would have to be marked over $100,000 per ounce.
Good Lord.
And people ask me, how much should I have in gold and silver? And I've gotten to the point now, because it is math. I mean, the system is going to come down. And I tell people, basically, whatever you don't want to lose, you want in savings in gold and silver, in real gold and silver, either in your hand or in a non-bank private vault.
What do you see that there's a lot of talk at the moment, Bill, about everything going into a digital currency and a digital economy? Where does gold sit in terms of preserving wealth in that sort of scenario? We're in very experimental times.
Well, they can do anything they want with the currencies. The current currencies obviously are deflating. They're losing purchasing power. And yes, I do believe that that's the plan, is that the central banks want to go to digital currencies, their own digital currencies, which may not include Bitcoin and the other cryptos that are out there. So it's hard to say, what their future is. But gold has been deemed by the Bank for International Settlements as a tier 1 asset, meaning that a bank can purchase gold, hold it, and there's no haircut on their balance sheet. In the past, they only counted gold for 50% of whatever its value was. Now it can be put on banks' books at 100%. And gold has had value for 5,000 years. I mean, governments can do whatever they want, but they can't legislate something. They can't legislate to zero something that has true value.
What do you see in this current crazy, chaotic market as the true most important function of gold and silver? Gold
and silver are not exactly the same, because silver's got many industrial uses.
Mm-hmm.
But gold is it's a foundation. And I tell people all the time that the whole premise of gold and silver is that you can't wake up tomorrow morning and find out you lost all your money. In other words, gold and silver are no one's liability. An ounce of gold or an ounce of silver is only proof that capital, labor, and equipment have already been used to create that coin. So it doesn't offer any promise. And when I say promise, there is no government that promises, we'll give you X amount of interest or whatever on it. All it is proof of labor, capital, and equipment already used. It's proof of value.
Right. Yeah.
And they cannot default. That's the key thing in today's world. And like your title suggests, a banana republic. And interestingly, if we were having this conversation 20 years ago, a banana republic from a financial standpoint was considered a banana republic once they got to 100% of debt to GDP.
Oh, wow.
The entire world is running well over 300% of debt to GDP.
Yeah.
It's a global bankruptcy waiting to happen. And again, gold and silver cannot bankrupt. They're going to be the last men standing.
So you're a precious metals dealer, Bill. You've seen a big rush with this. I asked you a moment ago, but um, do you think this will make people sit up and take a bit of notice? Because I speak to people all the time, and it's, fingers in the ears. No, 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 not listening. Very happy with getting my government handout. Very happy having my cash in the bank and buying real estate. Do you think that potentially people might suddenly begin to understand that gold and silver are, well, gold especially, gold is money, and that they really need to have that as part of their portfolio? Do you think there will be a fundamental change in people's thinking?
I think the fundamental change is already happening. I think people, I think money is finally beginning to figure out that central banks, treasuries have for years and years priced everything. And the system's so big, they're losing control of it. And I think as we see bankruptcies, and think about this past year, and I'm just talking in the US, I don't know exactly what happened in Australia, but I think it's pretty much all over the world. In the US, they had a moratorium on evictions and foreclosures. Now, is that moratorium going to go on forever and ever? And if it does, what happens to the asset side of that liability? In other words, if you have a house or a building or whatever, and you're leasing it out and your tenants don't pay, then your asset is worth less because you have no cash flow. Well, so as people see more and more defaults and bankruptcies coming, you're going to have a natural run to safety. And historically, the safe haven is to be in cash. And the ultimate cash is real money. Because remember, dollars, US dollars, Canadian, Australian dollars, British pounds, euros, they're all credit capital. They're all liability money. They're a promise. And promises are made to be broken.
And promises are getting broken very, very quickly. I mean, where the supply chains are being broken. But here in Australia, Bill, we seem to be almost in la la land. The real estate market is going up. People basically saying, well, we're all okay down here. Gold, silver, well, it's not. It feels very different down here at the moment. Do you see this as starting in the US and then going global, or do you think it will be so quick that it will be global? It will reach places like Australia pretty quickly as well? Because I can hear in your voice, I guess, how much you've got going on, and that's why I do appreciate you coming onto the call. Do you see this unpacking very quickly?
Yeah, I think when all is said and done, we're going to look back and find out that there was a failure, and within 72 hours, the entire world is engulfed. And you say everything's fine in Australia. That must mean that no one believes interest rates can ever go higher.
Correct.
Because if interest rates go higher, then how's anybody going to carry the debt? How's anybody going to ever refinance? What's that going to do to buyers who come to the table with debt? They can't carry as much debt as they could at 2% versus 1%. And, 3, 4, 5, 7, 10%, as rates go higher, the entire debt bubble pops.
Well, and I agree with you, Bill. It's really interesting, though. The Reserve Bank governor has recently come out and said our interest rates will stay low till at least 2023. One of the big banks has just come out and said, oh, fix your home loan for 1.9%. So there's a feeling that interest rates will continue to stay low, if not go lower. Not that they can go much lower here in Australia. So I think that there's a feeling here that everything's okay.
And that really doesn't make sense, that interest rates are where they are now. If you look at the financial leverage ratios all over the world, are completely blown out and higher than they've ever been, which by definition means there's more risk than there has ever been. And interest rates are not accounting for any risk whatsoever. There's no risk premium, in other words.
No, there is no risk premium, but also if interest rates were to increase, wouldn't that mean that the governments couldn't pay back on their debt? So it's in the government's best interest to ensure that interest rates are zero, if not negative, for some time to come.
Right, but the problem with that is people who have paper in a bank, they're going to look for a safer alternative or an alternative that pays some yield. It's going to create a mass exodus from paper currencies ultimately.
Well, I think we're
at the same time as interest rates go up.
I think we're already seeing that, aren't we, Bill? With, quite frankly, I call it the casino now. The stock market is crazy, and we saw that with what happened on Friday. But also, here in Australia, people are just putting money. I've seen comments where it says, "Oh, I'm making money just watching a stock market go up." They've got no idea what they're not investing; they're speculating, and it's massive speculation on a scale that I've never seen in my lifetime.
And it's going to end in horrible fashion.
Say that again, Bill.
It's going to end in horrible fashion.
Okay, so unpack that a little bit for me. So a lot of people putting all their money in Yep.
It's the biggest bubble in the history of history. It's bigger than the tulip craze. It's bigger than the Mississippi bubble, the dot-com bubble, the housing bubble in 2007, 2008. You could wrap all of those together, and it's still smaller than what we're facing right now. This is the biggest bubble in the history of history. And bubbles never end well.
Yeah, and a number of commentators, yourself included, have been talking about this for quite some time. What is the catalyst? And is it GameStop? But what is the catalyst that is going to change it? Because the can has been kicked down the road for many, many years, with governments increasing their debt, handing out money. I call it the funny money. Biden's about to spend $1.9 trillion of funny money. He's wiping out student loan debt. We're going to socialism and saying, you don't need to worry about anything. The government is here to look after you. What will be the catalyst that will, as you say, crash this market?
Well, at this point, because there's so many situations that are upside down, if I were to name one and tell you that's the answer, I'd be lying to you, because there's just so many potential pins ready to pop this bubble. You just don't know which one it's going to be.
But could it continue as they have done, kicking the can down the road for quite some number of years, and people just continue on their merry way, which they have been doing?
Yeah, no, actually, let me go back on that. The catalyst already happened. It happened on September 17th of 2019, when the repo market blew up and rates went to 10%. When rates went to 10%, the Fed was putting in $50 to $100 billion every single night to keep that market under wraps. And conveniently, the coronavirus came along and wiped out economies. And what that does is it lessens the demand for credit. So with the lessened demand for credit and the central banks basically pouring money into the system, they used the coronavirus as cover for the reason why they had to do it. And what I'm telling you is the reason they've had to continually pump money into the system is because it actually blew in September of 2019.
And where is that repo market today? And by the way, for those that are listening, the repo market is just short-term borrowing mainly, isn't it, Bill, in government securities? And, it's a lot of credit.
Yeah.
And
yeah, and that's been papered over with the trillions that's been pumped in. So they have that market under control, but they can never, ever back away. They can't back away for a single day, because if they do, then we go right back to where we were back in September of 19.
if they do, will they back away? They can't back. You're saying they won't back away. They can't back away. Both.
They cannot back away. Central banks cannot back away. Treasuries cannot back away. I mean, if you look worldwide, tax flows are, they don't, I mean, there's no place in the world that's running a surplus. Everybody's running a deficit, and the deficits are getting bigger and bigger and bigger every single year. So the powers that be cannot back away. They can't, I mean, the system can't stand on its own. It needs massive infusions of capital. And I guess you could look at it and say, well, that sounds like a Ponzi scheme, where you always have to have new capital, new investors coming in, otherwise the thing crashes. And that's where we are now. The central banks cannot back away, because if they do, the entire system collapses.
So they just keep printing more money, don't they, Bill? Because if they don't print more, the system collapses. There's $28 trillion in debt, growing. Do they stop printing, or do they just keep printing and then go to a universal basic income where the government is in control and they just hand the funny money out to people, and no one cares about gold?
Well, that's what it looks like, but they can't continue to print. They can't hand free money out, because what's the value of something that's free? Does it really have value? And people will figure that out, and they're figuring it out.
They're getting mad.
Well, they're getting that too. And understand that once the system does go down, we're talking about the credit markets. Once credit becomes impaired, then you have a problem with distribution. Because, for instance, for a wheat farmer in Nebraska, for that wheat to become a loaf of bread and end up on a shelf that's bought by a consumer, there's probably 10 uses of credit, including the shipping and the truckers and you name it. And if any one of those credit facilities breaks down, no loaf of bread.
But we're already seeing, due to this pandemic, supply chains are already breaking down. And so do you see that could potentially become even a bigger issue?
I absolutely believe it will become a bigger issue. It'll become the biggest issue, because every day that you wake up in the morning, you're only 72 hours away from complete anarchy. If the credit markets break down, you're within 3 days. And I say 3 days because, the average person can go 3 days without eating. Can't go more than that.
Okay, Bill. So what do you suggest? There are a lot of people listening to this call today. What, excuse me, what do you suggest people do, given the chaos that you're seeing at the moment?
Financially, you want to get out of the system. If you have stocks and you want to continue to have those stocks, I would have your broker send you the certificate, so that if your broker goes bankrupt, you still have your shares. You basically want to get out of the system. You definitely want to own some silver and gold. You want those either in your hand or in a private non-bank vault, but you want to do your best to not play the game. From a personal standpoint, you want to become as self-reliant as you possibly can. I mean, if you have the means to put up solar panels and drill wells and not live in the middle of a city with a high population, you want to be out. You want to be out past suburbs even, because when this goes down, all hell's going to break loose. And if you're not where all hell is breaking loose, you're in a safer place.
Are you talking from a US, because, again, I'm talking to you from Sydney, Australia. We're doing okay down here. We're a little island. We're a penal colony, as I keep saying to people. We can't travel. We don't let people in. We don't really let people out. I can see that the US could have some massive social unrest and some issues. But do you really think that that could go global, Bill?
I don't see how it could not go global. I don't see any scenario where the U.S. goes down and doesn't take the rest of the world with it.
The US and China have been having a little bit of a spat lately. Where do you see China's role in all of this?
Well, China has been growing dramatically for the last 30 years. Does the yuan become the new reserve currency? I don't know. But I do believe that the yuan will become more important than the dollar. And right now, the dollar is about 65% of central bank reserves all over the world. Yeah. I don't know what it is in Australia, but the point being, if the dollar gets smoked, you're going to have central banks all over the world with gigantic black holes in their balance sheet.
And so do you see that China could become as strong, if not a stronger economy than the US?
Well, from a manufacturing standpoint, they probably already are.
Yeah. And they also have a lot of gold. They produce a lot of gold, but they've also been buying quite a lot of gold, but keeping it a little bit under wraps.
Well, they produce about between 400 and 500 tons per year.
Correct. Yeah.
Inside the country, but none of that ever leaves. So we know they're increasing their reserves by 400 to 500 tons per year. And if you went back from say 2009 to 2016, 17, I could show you on the back of a napkin how China has imported more than 20,000 tons.
What are they doing?
And that would be 2.5 times what the U.S. supposedly has.
Do you see that China is playing a long game with the precious metals markets?
China plays a long game with everything. I mean, look what they did with Hong Kong, a 99-year lease. Look what they did with the Panama Canal. They play the long game. So, to look out a quarter or 6 months or a year like American companies do, they don't do that. Their shortest view is 5 years.
Absolutely. So Bill, you have been, I've watched a number of your interviews. You have been talking about the chaos for a while. You've been talking about what people can do to be smarter. You've been talking about the gold and the silver prices. And for quite some time, you're saying the system is in trouble. Have you ever seen anything like what you saw last week and its potential impact? Do you think that now it's getting real?
Yeah, it's absolutely getting real. Just as an example, just look at the premiums on physical silver have risen more and faster than any time I've ever, in my career.
But is that just, Bill, is that just because, sorry to interrupt you, but is that just because we've got these, the Reddit group, Wall Street Bets now turning around saying, well, now we're going to do the same thing to silver. And the majority of people are going, okay, well, let's just all pile into silver. It's not being done with any true economic understanding. It's just follow the herd.
Well, it is being done with some economic understanding, because understand that all of these targets are highly levered short positions. And the way to bust a highly levered short position is just come in massively and buy. But think about GameStop. I mean, that's a buggy whip company back in 1900 when cars were cars were first being produced. If you were in the buggy whip industry, you were going to go out of business. And that's what GameStop does, is they sell the cartridges for games.
Yeah.
And that's basically going to become all, it's going to be online. It will be electronic as opposed to, buying a cartridge. So GameStop is basically, if you look out 5 years, I can't see how GameStop is not a zero. And so they take a stock from $15 and run it to 500. Well, I mean, that's not an economic move. That's a financial move by people understanding that there's 140% of the stock sold short. And if you start buying it, you're putting the screws to the shorts. And that's what's happened is they're forcing short covering. They're forcing the default, if you will, of credit.
And they're forcing a lot of these big companies to potentially go into default and be out of business.
Ultimately, yes.
So that's working on the silver side of things. Where does gold sit on this system? Well,
once silver busts wide open, it's the same thing in gold. At one point, I think it was back in 2017, 18, and it's lower. It's above 300 now, but we got to one point where there were 500 paper ounces sold for every 1 real ounce that existed.
Wow. That's crazy. And no one understands that. But that's the same with the funny money, the paper money as well, fractional reserve banking.
Well, but people will figure it out all at once. That's the way bubbles burst, and gold and silver have been in a reverse bubble because they've been artificially suppressed
for a very long time.
They've been suppressed the same way other things have been levitated, via the use of paper contracts with debt behind it.
And you see that flipping very soon.
I think it's happening right now in silver, and it's happening with many miners.
All right. So, Bill, what would you suggest to those people listening, some of whom are small investors? We've got some bankers. We've got people listening from Canada, from New Zealand, from Singapore. What would you suggest to people as they're listening to this on Thursday, the 4th of February? What would you suggest that they do to protect themselves in this coming chaos?
Well, like I said, do your best to get out of the system. Have as few intermediaries between you and your money, and become as self-sufficient as you can. I mean, the time is very, very late. So, I mean, I can't tell you when this thing busts wide open, but when it does, then it's too late.
Bill, if people want to get in touch with you or to read some of the JS Mindset commentary, and I'm sure that there's a lot going on at the moment, how do they find you?
You can go to JSMindset, MINESET.com. We have a public side and a subscription side. The subscription side is well worth it. If for no other reason than we do a 1 hour interview. It's a four-person roundtable. We do that every week.
Wow.
And we've talked about, we talked ahead of time about many of the things that are happening now.
So is that you and Jim and a couple of others?
Yes.
And Jim Sinclair is the partner at jsmindset.com. And your Twitter handle, Bill, do you tweet?
I don't. I don't do any no social media whatsoever.
That's probably why you yeah.
And I'm talking to you right now on a flip phone because I ride a horse every day, and if I rode with a smartphone, I'd probably have to buy a dozen to replace broken smartphones.
So you ride your horse every day. Whereabouts are you, Bill?
We're in South Texas.
Because were you in Costa Rica for a little while?
Yeah, we lived there for 5 years, from 2006, end of 2006 to 2011.
Was there, do you just want to get out of Dodge for a while?
I was 46 years old at the time and saw what was coming. And I was a branch manager, and I did not want, as a branch manager, you're responsible for every trade in the office, even if you didn't do the trade, but you supervised the trade. And I left, packed up the family and moved to Costa Rica because I did not want, I didn't approve of the things that firms were doing. And I didn't want to be a part of it. I wanted to get out before things busted.
And what brought you back again?
My Spanish got good enough to understand that living down there as a gringo, they view all foreigners as extremely wealthy. Even if you're just living on Social Security, you're very wealthy. And I just thought to myself that when the system does come down, if you don't look like them or sound like them, you're going to be a target.
Wow. Okay. So back to Texas and to your horses. Well, Bill Holter.
Yeah,
go on.
I was just going to say, back to Texas because, I knew this was coming and wanted to go through it shoulder to shoulder with like-minded people that, I'm part of.
Well, I think it's going to be very interesting to talk to you again. I hope, Bill, in the future, and we'll see where all this leads. But for now, I really appreciate you talking to all of us here on the virtual Gold Conference. And maybe one day we'll see each other in person instead of over a phone.
Sounds like a plan.
Good luck with all that dealing that you get going on, and I really appreciate it. Thanks, Bill Holter.
Thank you, Carrie.